Okay, good evening, good afternoon, good morning, everybody, wherever you are. Thank you for joining me today. Appreciate Anna's efforts in this with Investors Expos. Appreciate it, really, thank you. I will try and be brief for, maybe keep it under 1 hour. But really, it's a very comprehensive subject and there's a lot to learn, okay? Just 1 second. Yeah, there's a lot to learn. That's why I really encourage everybody to basically go to the website, which I will share with you, and maybe join the trials. If not, if you don't want to join the trials are for free, no obligations. But we also have a lot of educational videos on the website, which I will also guide you through. Today's subject is volume profile and using market depth with volume profile, which we have been using for a very long time. Not many people have heard about it or used it or believe in it. It's because it's not really available just like that. It's a comprehensive subject and it takes time and efforts to understand it and trade it. A lot of people are not willing to give up their current education, current indicators, or even change their platforms, etc., just because they got used to doing the same things over and over. If you think there's something for you to benefit from, to use, then I encourage you to look into it. Maybe if you want to change or get into it, that's absolutely fine. I'm here to help and support. So let's start with the main thing. First thing is before anything, I have to let you know that I don't sell today. I'm not going to be selling anything. Although this is the website here, I have membership information there. I'm not going to sell you on that because at the end of the trial, usually I offer special special pricing, whatever works for you, right? But before you do anything, first thing I'm telling you, we offer trial. This is a 2-week trial we offered for you for free. Once you join us, you'll have 2 weeks to watch me trade, watch me give signals. We have live trade room that is available to you 3 days a week in the morning. And we have a Telegram channel, a full Telegram app with multiple channels for you to join in the trial. For example, I have this Telegram that is available to you once you join us. As this is for members, but if you join the trials, you will get the same access as they get. I have the indexes, which we trade the Nasdaq in the Russell, etc. E-mini S&P. We have a channel for elite members. You see, I have elite members chatting and talking and sharing ideas, sharing signals, and asking questions. I also here I share our daily room links, like the live room link that we do every morning. This is it. For example, this morning live session I posted this starts at 9 a.m. so everybody gets it, right? I have oil and nat gas, which is, you see here, oil, I called it long, and I was looking for 79 and 80 targets. Oil now is just below 79. We have currencies, whether they are currencies in the futures market or currency pairs in the Forex market. We have that. Metals, gold and silver, as you see. And I'm looking, for example, long on gold from 2 levels. One of them was here and the other one is 1770, and I give them details. And we have a free channel that you can join right away. You don't have to wait. There's no trial. This is a free channel that you can join simply by scrolling down here. If you click on this free trade updates, it will take you to our free channel, okay? Just You just need to have Telegram installed on your computer, on your device, etc. Another thing I want you to pay attention to is our YouTube channel. If you click on our YouTube channel, there's a lot of videos for you to enjoy. And almost all videos are taken from our live trading sessions, as you see, right? These are videos that from live trade rooms and live trade situation, live trade calls, basically. Okay. Now, let me take the YouTube channel away from here. And let's go back to, let me take this. Let's go back to, so we talked about the trial. And also, before you join the trial, I will go back to the same website. There are a couple of videos, please watch them. I am a bit slow because I've been with my students all day, and this is the end of the day. I'm really tired. I will try and gather my energy for this webinar. But I've been with my students all day watching the charts, calling trades. So I'm a little bit tired. So I'll just bear with me. A little bit slow, but I'll get through this. I'm trying to focus on what benefits you for today. Before you join the trial, you go to this education tab, please. All right, and we have multiple educational videos for you that you can watch for free. But there are a couple of videos that are very important. Right, one of them is 2-week trial. What you should be expecting. This is very important before you join the trial. Okay, and also clarifying my trade calls, because it's important for you to know when I have a Telegram trade call here, for example, on indices, and I'm telling you that I'm looking for a long on the RTY, just like you see here. This is not a trade call. This is for me to let you know that I'm looking for a long. My trade calls consist of the direction, which is either long or short. We'll also have exact pricing, folks. And I will show you examples. For example, here, crude. Where is it? Crude. CL, possible long, for example. This is not a trade call. It's possible long. CL long at 74.80 or better. You see, price. CL stop, crude stop, 74.60. Take first target at this price and then leave a runner to that price. Okay, these are my trade calls. So when I say it's important for you to watch this, okay. 4:30. It is 4:30 p.m. Just started now. Yeah, it just started now. So no, we just started. No, you have not missed anything. So for you to attend the trial, and the video will be available, by the way. So don't worry about it. You only missed maybe a few minutes. So for you to attend the trial, I would recommend that you go to our website, go to the educational tab, and watch these two videos, two-week trials, what to expect, and clarifying my trade calls on Telegram. Another video, if you want to watch it, that's going to be great. This is the most important, but that has nothing to do with the trial. That has to do with you as a trader. This was done for us by Dr. Kenneth Reed back in 2014. The name is Adult ADD and how it manifests itself in traders. It is very important to watch this video. It is really, really good. Really, it will change your perspective on a lot of things, including not only trading, but your own personality. So it's very important. And if you want to watch other videos, that's up to you. Okay? That's completely optional. How I started with volume profile. But let me first show you what volume profile is. The volume profile that we use it's designed, it's made as a user-friendly volume profile. For example, this is the Nasdaq, and this is the volume profile on the daily chart. Look at the colors at the right hand side, and the bellies and the valleys and the colors, and you see these are different zones, continuation zones, rejection zones. Some of them are stronger than others. So if you click on this, you see how it's getting. Let me choose another one on the hourly, or 1 day here. This is the daily. If you look at the right hand side, look how I can make it smaller. You see that, how I can make it larger, how I can sharpen the edges, how I can smoothen the edges. You see that, right? I can do that. I can look at the same volume profile on a 60-minute chart, on a 987 tick chart, right? And I can use also the NAS 100, which is a CFD. Anybody is in outside of the US, they can trade the CFDs, which are the equivalent of the Nasdaq, which is the equivalent of the indices, but in the spot market. Okay, so that is also that is volume profile. So going back, when I first started in 2001, it didn't take me long to understand that the market is moved by buyers and sellers. I will read the questions later, if you don't mind. I'll make sure that I have enough time for everybody. The market is moved by buyers and sellers. And for me to understand buyers and sellers, I started looking at the tape, which is the bid and ask ladder. It wasn't easy, folks. It took me months and months and years to understand that, yes, it is good, but it's not easy because you have to read every number. You have to pay attention every single time. So I created a lot of things from this. I created the magnet indicator that it's still available today, but it's enhanced. We call it now the SAL indicator. SAL indicator, Simon's attraction levels, which I will also share with you. End of selling, end of buying, capping, point of control. This is back in 2003, 2004, 2005. Okay, so that was the beginning of me trying to get the volume simplified for people to understand it and read it. All right. For you as a trader, what is support and resistance? Do you trade with indicators? Of course, a lot of us trade with indicators. Why most indicators don't work? They don't work. At best, they work at 50%. I will show you examples as well. I will tell you how I trade, how I look at the markets from the volume perspective, right? We have, for example, a member here, John, saying when you are trading and watching your normal charts with lagging indicators, often the market will reach a point where it does something you just can't understand or predict. However, he says using volume profile the way Simon does gives you a window to otherwise hidden currents that drive the markets. Quit reacting. He says quit reacting to the markets. Basically, be proactive. And to be proactive, you need to understand the volume that the market created. Very simple. How do we? Three main components of the strategy that we trade. Three main component: anticipate, confirm, execute. Folks, do you have any idea how important it is to anticipate the market, the next move, whether for the next minute two or a day two or hour and two? Do you know how important that is? It is important. Almost 90% of traders cannot anticipate the next move. They could use their indicators, and they could see what the indicators are telling them, but they really cannot anticipate the move because they don't see what the market makers are hiding from them. Anticipating the market's move is crucial. If I show you examples, of anticipating the market's move. Hold on, let me go back. Sorry. I'll show you example. I'm not telling you something that is like, hypothetical or whatever. So look at this. This is just now. This is today and yesterday. I told everybody the market is going to 70. Look at the pink price. Look at the pink magenta line is. This magenta line. Look, it's just below 79. In fact, it's 78.80. Do you see this magenta line? Do you see where the market was when I drew this? It was at below 75, 74.80. 74.80, I said it's going to 79 or 78.90. And I called this trade. I called it. Okay, I called it. I showed you, I called it. And where do you think the market is now? Right now, where do you think the market is? Right now, on the crude, this is the charts, this is the crude. It just stopped. The market closed. Look, just at 79. What there's 79. Here, this is 79. You folks, this is 79, sorry. And you see it stopped right here at 78.80. Okay, and this was the same view. Look, same view right here. I said it's gonna go from 74.80 to 70, almost 78.80. Okay, so anticipating ahead of time is not something that you assume from an indicator. Anticipating is what the market makers are hiding, which we call them the title of this, the subject of the title subject of this webinar. Okay, volume or depth of market. If you don't understand depth of market, and not any depth of market is valid, because most of the platforms, they provide you with depth of market that is live for the like intraday, for now, for the moment, for the hour, for the next 10 minutes, not what happened 6-7 days ago or a month ago or 2 weeks ago. No, so it's all different. So it's very important. And then we have confirmation. Anticipate, confirm, and then execute. Okay, and then execute. Let me show you how we trade versus what most people do. And I've been doing this for a long time. Most people still do the same thing. They don't look at the volume. They don't understand what the market maker's intention is. They follow whatever the news is available to them to make decisions in a lot of cases. And I'm talking about simple thing, crude information, crude news come out, and they depend on it. They say, okay, the inventory came out very high, so the crude should go down. And you see it's not going down, it's going up, because they don't understand, they don't see what the market makers are doing behind the curtains. Okay, so let's go back and let me show you again the volume profile that is I'm using, and I'll give you a simple example. This is a 60-minute chart. Let's go for something cleaner than that. Let me have something cleaner than that. Maybe this is clean. Yeah, maybe. Okay. Maybe not. Nat gas maybe is clean. Just for me to show you a clean chart. Okay. No. No. And Nasdaq. Okay. This is the best. So this is a chart, and you see on the right-hand side. You see on the right-hand side, you see a volume profile, right? This volume profile gives me a lot of things that I need to understand, and this is on a daily, so this is long term. But it's all the same. Whether you're looking at a small charts, big charts, the idea is the same. This volume profile gives you a multiple of views. Okay, one of the view is a continuation zone. What is a continuation zone? You see this? This is a continuation zone, which means once the market gets into it, if you're trading long term, for example. Okay. Same thing when it gets when you're looking at a smaller charts. You can also see smaller breakdown of the same thing. So for now, I cannot have you understand everything in the next maybe 30 minutes or so. It's impossible. That's why we offer two weeks trial, so you can ask questions, you can see what we do. So, but this is a continuation zone, meaning once we get into it, don't fight it, don't go against it. So far, so good. You see this from here all the way to here. This is another continuation zone. We call these ascending and descending contracts. This is another continuation zone. What does that mean? Meaning once you get into it, don't fight it. Stop losses will not hold here. And there's another continuation zone right here. Don't fight it. Once you get into it, it's going to continue. Another continuation zone. And so they all different, but they're all continuation zones. What do you think we can find between continuation zones? Between every two continuation zones, there's another zone, we call it, and I'll put it as a blue line. We call it rejection zones. Folks, this is a general example, okay? Continuation zone, general zones. One thing on the side, which is the subject of maybe the next thing, you notice on the top, you see this magenta line? You see it? This is the biggest volume cluster that is available in the market right now. Amongst the 50 levels that I have only 50 levels. So this is the biggest one. And it's still telling me the NASDAQ eventually is going to go recoup all the way to the highs. There's a chance it could come back down to 16,000, but eventually it's coming back up to the highs. Okay? So now, so far, I explained to you continuation versus rejection. Now, let me simplify it in a way that you would understand why we are a bit more enthusiastic than other rooms, other traders, and why we do, in most cases, better than a lot of traders, a lot of rooms. Mind you, and on my website, if you look into it, we say 1,000 ticks a month or more. 1,000 ticks a month. For example, so far this month, we've been at 3,000 ticks. It's been an easy month, relatively speaking. We do swing trades. Okay, so let's assume that you're looking for a long and the NASDAQ is gone up. Now you're looking for a long. I'll incorporate my volume profile views versus regular indicators. And let's assume that you're looking for a long. Of course, you're going to be doing something like, okay, let me wait for a retracement. And then when it gets to my retracement, I will go long. And some of your retracements are, let's say, Fibonacci levels. You have a level here, another level here, another level here, and maybe a level down here. Okay, so the market comes down. You say, okay, let me take it. Let me take it. You take it. It goes down immediately. It takes your stop. You say, okay, that's fine. That's fine. It's going to come back down to 50%. This is my 50%, and it's got to bounce. It comes down here. You take it. It goes in your favor. A couple of ticks. You're excited. Boom! It comes back down. Takes you out. Then it goes back up because, oh, no, it's holding. It's just, went down. It just did a stop loss hunting thing. You take it long again, and it goes back and takes you out. And then it comes back here. You don't take it. It comes a little bit lower maybe or not, and then it just goes up. You missed it. It's gone. You don't take it because now you're gun shy. So you didn't know why. What was the reason you would take this trade? Why would the market bounce from this first level? Why? Just because it's a Fibonacci line on your charts? To me, that doesn't make sense. Why would it bounce from the second level? Just because Fibonacci's? Why would it bounce from the third level? Doesn't make sense. However, let me go back. And let me show you, let me incorporate our volume profile levels. Now, when the market went up this way, the volume profile levels, I told you, it created continuation zones. Of course, this market was at one point coming down, going up, whatever. So there's history. So that history gave me levels. Okay, so it gave me a continuation zone like this, right? This is a continuation zone like this, and then another continuation zone like this. Remember, I told you they all different, but they're all continuation zones. So this is a continuation zone, this is a continuation zone. What is in between continuation zones? There's always something called a rejection zone. So this zone here is a rejection zone, okay, which basically is from, this is the rejection zone. All right, so now what do we do? What's next? The market is coming back down. It came back down to your first Fibonacci level. Are you going to take it now, knowing this is a continuation? Remember, when I showed you the zones, I said, once it gets into that level, don't fight it. So it's in the continuation zone. Are you going to fight it? No. Even if you fight it, the market will not fight it for you. It will continue. This is a continuation zone. It came to your 50%. Are you going to fight it? No. This whole thing is continuation. No, you're not going to fight it. It came to the last one here. Are you going to fight it? No, you're not going to fight it. Finally, it comes back down to this level. Now you are ready, because now this is the zone of rejection. Is this enough for you to take the trade long? This is, and at this time we are anticipating a long, anticipating the long, anticipating the long. Remember, anticipating only, nothing else. Now, not only you're anticipating the long, ahead of time you know your stop loss. If you take a trade from here, is your stop loss is going to be here, or it's going to be at the green level here? It has to be at the green. Why is that? Because if you take it, if the market touches the green, it's inside a continuation. It's poking into a continuation zone. It means it's going to come back down and take the blue too. It will take the blue level too, and it will go all the way to the bottom. So why do you want to have a stop loss that is not necessary? This is what I call smart stops. And I have videos on my YouTube channel. If you go to my YouTube channel, folks, and just, where do you search? Here. Go here and search smart stops. You'll have videos talking about smart stops on my YouTube channel. Okay? Smart stops, what they are. How do I use them? Very simple. So now, I know my stop losses ahead of time. That's why, folks, when I call my trades, usually almost 90% of the times, I first call my stop loss. I say, this is my stop loss, right? And then now I am ready to take the trade. Now, what is the next what is the next condition? The next condition is confirmation. Confirmation, C, confirmation. How do I confirm the trade? A few things. The volume profile here will act up. You will have things like this. I'll show you. Okay, here. If I go to a small chart, you will have things like this getting created right when the market gets into it. See this? Heavy volume comes in, heavy volume comes in, heavy volume comes in. See those nooks? These are important, but you don't need that, because you see this magenta, these magenta lines. These magenta lines right here, these are heavy volume clusters that will show up. These are dynamic. They will flash. They will come in and out. You will see them coming in. Okay? And this is when you see the buyers are lining up in your favor. So we anticipate and then executing the trade. Now execute. How do we execute the trade? This is very important. I call the trades usually, I mean, not usually, always. It's been like this, a tradition, on 3 contracts. You can do 3 micro, 3 minis, 3 full. You can do 6, whatever, as long as it's 3 or multiples of 3. And when we call the trade, stop loss is established. Let's say the stop loss is from here to here is about, let's say, 15 ticks. This is a 15 tick stop loss, for example. Could be 50, could be 14, could be 20. It depends on the market and the gain behind the entry. So let's say this is a 15 tick stop, and we're looking at 3 contracts trades. I will call an exit for the first target. I will say take T1 at this price here. This price is not random, because within this continuation I will find a hiccup. We call it a hiccup, something that could reject the market. So we take our first target at let's say 20 ticks. Target 1 on it's for 2 contracts. I'm sorry. Target 1 on 2 contracts. So 2/3 are out with 20 ticks. So that means we got 40 ticks already in your pocket. You're already up 40 ticks. Your stop loss is 15 ticks only. So even if the runner stops you out, you're good. You still made some money. And that also helped me not moving my stop loss prematurely, because I want the market to go up to the next safe zone. Could be within the zone there's a safety net that if it breaks it, I can move my stop loss higher and higher according to the smart stop conditions. It's a comprehensive thing, but with the 2 weeks trial, I hope you'll get it, you'll understand it. Please, let us know if you want to join the trial, because it's a process. Although it's free, but it is a process. I need you to benefit from it fully. Okay? So, and that's how we work. For example, here, this is my example on the indices. Look, this is today, noon, just after noon. I said, I'm looking for RTY long. RTY, this is the RTY. Okay. Just give me a second. I'm gonna just move it a little bit so you know. Just move it, move it, move it, move it. This is around the time. I'm looking for RTY long, but my stop loss is below 2300 area. Okay. You see this. This is live for my students, and I have 164 students right here watching it. So I'll wait. And I said, to be exact, my stop loss is 229.92, which is right where the blue line is. Okay. And then I shared with them a view. I said, this whole level is the support. So my support on this trade, although I'm looking for a long, but my support on this trade, my rejection area, it's not one line. It's a zone between here and here. That's a bigger zone than my liking for a stop loss. So it's optional for some students to take it or not. If anybody took it, they are up already about probably 160 ticks or so. This is what I told them. This is the zone, and the stop loss is below it. And look what happens after. If you see, it goes up. Sorry, it goes here, and it goes up. See, it goes up from here all the way up. So it did go up, but after a struggle. So I did not call this trade. But if I show you something else, this is from, where is it? Where is it? Where is it? It is here. This is a recording from Sunday's open. Sunday, the market, where is it here? One second. Okay, so this is, if you look at the recording here, this is what you see in front of you. I hope you see it clearly, all of you. This is a recording from Sunday until yesterday. I followed my call on the crude for this purpose, for today's teaching purpose. November 21st is Sunday at 5:41 p.m. Think about it, folks. 5:41 p.m. Sunday Eastern Time. That is 20 minutes before the market's opening, before the market's starting. So 20 minutes ahead of time. Look what I'm saying. I would like to see crude opening lower at 74.80. You see where the line is on the crude? Right here on the left-hand side. You all see it, right, folks? You all see it, the line. And I'm saying I'd like to see opening of the crude at 74.80. So I was expecting the crude to open with the gap. It didn't open with the gap. It opened without a gap, but look what happened. It comes back down fast to it. This is my trade call. Look, it comes back down fast, and I call it long right away. See a long possible? Long from 74.80 or better. You see? I called it long from 74.80 or better. To the tick. This trade call, just the first target alone, it was about, I think, 60 ticks. 60 ticks on first target. It jumps fast right away. Right? Take T1. This is on Sunday where the market, where we don't have a room, live room. So when there's no live room, I'm typing for them, typing for members. They have it on their devices and they're watching ahead of time. So not only 20 minutes ahead of time, I told them, hey, listen, guys, I'm going to be watching the crude for the open. I also gave them the exact price and the stop loss. The exact price and the stop loss. And look, and if I go back simply, CL targeting 78 and 79. This is from Sunday, folks. If you look at your crude now, it's just below 79. It's at 78.80, right? And I gave them also the snapshot that I showed you earlier, and off you go. And hold on, look at this. I said, if you want to get another entry, because you see, I see some people are in and out, some people missed it, right? And I said, if you want to get in another trade, try and get in from 75 level. Again, for another entry for those who missed it. And 75 comes and then goes back up again. And that's it. I mean, how many times I can call it same trade, right? So you see how transparent it is. And also I tell them my stop loss remains at 75.40. And then I moved it to 75.60. See, it says Unreal basically done for tomorrow. This guy made this one of our main, very advanced student. He says he made 1800 on this trade. So then I kept saying, at one point, folks, I told them there is 77 resistance at 77. You see 77 on top where the magenta line is here. There's a resistance at 77. If anybody wants to liquidate at 77, you already have 200 ticks in the runner. So liquidate. I said, I'm keeping it. All right. So it goes like this. And after that, look, I find a trade on the nat gas. This is the same channel. The crude and the nat gas have the same channel because energies, right? So if you look at it, if you look at my trade calls, I said nat gas stops at 4.6. I'm looking for a long to 5, from 4.479 whatever to 5. This gave me 260 ticks trade. Okay, and I'm just keep typing. Look at the nat gas. This was my trade call on nat gas from the line here all the way to $5. Right? And eventually we get it. This is nat gas going, and I tell them nat gas and crude. At one point, you will also probably see my gold trade here. Okay. So there you go. So between the two trades, folks, we got 530 ticks between the nat gas, okay, nat gas trade and the crude trade, 530 ticks. So when I say on my website 1,000 ticks a month, it's actually not exaggeration because we look for big swings. It's a bit relaxed. It's a bit more of a relaxed situation in the room and my trading, because I don't call every single move. I wait for a higher probability trade, then I call it. See, I mentioned CL is going up nicely. I see 77 to be resistance, as you see, if you want to exit. So, and sure enough, 77 brings it down, actually, right? And at one point, it takes my runner at plus 50 ticks. My runner was taken out, although the crude gave us 400 ticks move or 350 ticks move, but my runner was at 50 ticks only. So I made 160, or sorry, 120 plus 50, 170 on this trade only. But the nat gas was a nice 300 and something trade. So altogether was 530 ticks between the two trades. Gold, look, gold trade call. I called it, and I called it first target met. I think we got another 60, 70 ticks on this first target, and then the stop loss was hit after. We still made some money, right? Gold, I called it twice, and I recorded it right here. It was part of the whole session. Okay, so basically, folks, that's what we offer. It is a comprehensive offer. What we do, it's not something that um, you know you could just basically understand in 2 minutes if you have not been with us before. It takes time to understand it. It takes time to accept it. That's why 2 weeks. We offer 2 weeks trials for you to join the room. If you want to chat with other members here, we have a chat room for elite members, and we have about 155 members in it. Just chat, ask. I am available. If you look at this here, I'm available for a lot of members to chat with me in private. Send me a text message if you want to ask questions. I'm available. But if you join us, please keep in mind that you will not benefit from this unless you look at all the instruments that we trade. You will not benefit from this if you are saying, okay, I only trade the NASDAQ. What if I don't have anything on the NASDAQ for a week or 2 weeks? What are you going to do? So if you don't trade those, pay attention. You have to join all the channels, the metals, which is the silver and the gold, the currencies, oil, and the indices, right? You don't have to trade them during the trial, but watch, keep your charts on and mark trades, because eventually if you join us, you will join us to trade all of them. You need to learn, right? And basically that's it. It's a comprehensive thing. What else do we have? Let's see. What's the next slide? Oh, these are some old pictures from the past. This is from 2006. I was very young then. These are some local in Brampton, Ontario, Toronto, Ontario, Mississauga, Ontario, and this is Denver, Colorado. This is Las Vegas. I did some seminars too, right? So now I don't want to. I'll end the show here. And basically, what else? I will go to the website and I'll open the questions. Okay, here. One thing you need to know, I have a handout. I'll copy it and I'll send it to all of you guys, okay? Under the chat window. This has a lot of information, including somebody asked me before, earlier about the link to the Telegram. You will find it here in this one pager, okay? YouTube channel is part of the website. I told you, YouTube channel is part of the website. This is the website, thetraderinstitute.com. Let me go home here and then let me copy this. It's part of that handout anyway, so I don't need to give you anything. One thing, if you join us as a member, once you join us, once you get into the trial, once you like it, decide to become a member, there is a period of training. I'll give you access to it. That includes all the levels. For example, level 3, advanced level for volume profile and how to understand it. Okay, once you click on it, you have a list of videos. Mind you, the trial also will help you understand the basics. So crash course on volume profile, and then you go through the rest of the lessons, okay? And this is level 3, for example, and you have level 5, level 2, level 1. Level 1 is important. Level 1 is very important because it deals with every single indicator that we offer for Sierra charts. We use Sierra charts for a reason, folks. I don't use it randomly. I use it for a reason. One of our main indicators, as I said, is the volume profile, and also the main one is SAL indicator, which is market depth. Other than Sierra charts, no other platform offers historical market depth. Folks, let me say it again. Historical market depth, meaning market depth from, hold on. If you, for example, NinjaTrader, and so I like it. It's a good platform. I have most of the indicators to it for NinjaTrader 7. But market depth on NinjaTrader is just here, just now in the next 5, 10 minutes, 30 minutes, and that's it. Nothing else. A few levels. But that's not. It's tricky because it's not giving you the true picture. It's just now. What about an hour ago? What about last week? What about last month? Same thing goes with all the other platforms. Believe me, I did my homework. I invested a lot of money to find out a backup platform to this. Platform is not about only, you bought it, it's user friendly, you like it, but if it doesn't do the job for me, why do I have to stick with it? I cannot find things like, okay, the Nasdaq, I see the Nasdaq is going up to a new high after. This is a must. If you look at gold. Look, gold, you will be surprised. What I'm telling you here is something that very, very important. If you don't know where the market is going, there's no need to push it. Really, you have to know where the market is going ahead of time. Look at gold. This is gold. Okay. This is from November 17th. Today is November 23rd. 6 days ago, when the gold was at about the highs, 1870 level, I said gold is coming back down to what? Look at the prices, 1840 and 1820. 6 days ago. Do you know where the gold is now? It came back down to 1840 and 1820 and also broke them. It broke them too. So that's what I mean by, your platform has to serve you, has to be beneficial to you. If you don't look at market depth, then you don't have to get Sierra charts. It's up to you. You don't have to. But Sierra charts is important to us because it gives me all the indicators that I have. They are built on it and they work on it. Yes, volume profile, you can have it on the NinjaTrader, and I have it too. Some of the other indicators they could be done on any other platform. But that particular, I have two particular indicators. That one of them is SAL indicator, which I told you, market depth, the magenta lines. I cannot have it on any other chart. Now, I will open up for questions and I will wait for you to ask questions. Please ask questions. Yes, it is recorded. The link on Telegram, I gave you the page. Yes, volume profile applies on Forex. Yes, here, this is your Euro, and this is Euro US here. And I'm expecting the Euro US to bounce soon because I'm looking at the weekly here. There's a chance for the Euro, this to be the low, wherever the Euro US is. Yes, it does. Work on Forex too. We have Euro US in the Forex market, spot market, and I have it on the futures market. And look where the Euro is going up. You see this magenta line? Can we use? Oh, yeah. Listen, I have students, Rob, I have students that have not switched to Sierra charts. They learned, they use their own platforms because they don't have to get the full membership. Because I have a membership that will give you just the trade calls and the Telegram and the live room. I use AMP for Sierra charts. You can use them. What markets do you primarily give trades on? Oh, actually, it depends on the activity, but NASDAQ, Russell, YM, crude, sometimes nat gas, depending on the move. Gold, often too. But we had weeks where we had the markets very choppy, the indices very choppy. So I had a lot of Forex, for example, that week. Whether you want to do, let's say, Aussie US, or you want to do Aussie in the futures market, same thing, right? Or you want to do both. So it depends, as I said earlier, you have to mix up. You have to look at all the markets that are available to you. If you just come in to trade one instrument, I'm not a good fit for you because you might not have a trade on that instrument for days or maybe a week or two. Make sense? So for the trial, I will go back again to the website. I want you to go onto the website. I gave you a link on the chat. Go to the chat, folks. This is the chat window. I don't know how to expand it. This is the chat window. You see chat? It's on your go to webinars control panel and find the link here. There's a link I gave you. It has all the components that you need to join the trial, watch videos, etc. Any questions? All right. So I really hope to see you folks. I hope you enjoyed the webinar. I really want to see you in our trial sessions. Maybe not this week. Tomorrow is our last day, and then after that is Thanksgiving holiday, the U.S. Thanksgiving holiday, which is basically the markets will be slow and closed. I wish you a great long weekend. Enjoy your Thanksgiving, and this webinar is recorded, yes. And all the best. Thank you. Thanks, everybody. Thanks, Anna. Appreciate it. All the best.
Thank you,
Thanks,
Simon.
guys. Appreciate it. Thank you. Bye for now.